Today, we're going to run through 3 steps to build an unbreakable trading model. Now, I know 2025 has not been a joke for many traders. In fact, it's been quite challenging for me. So, I'm going to share some of the things that I am using and that I've used in the past to overcome any sort of slump and ultimately get on side with the better moves in the market. So, without any further ado, let's hop over and look at some notes that I've taken and actually walk through this process. So, these 3 steps I've come up with over the years. I actually had a call with a client just earlier this afternoon, and it really made me think about how do we actually adapt to markets changing? Because it is one thing to say, oh, the market's crazy, this and that. But if you are consistently sidelined and not ever seeking that improvement, are you really going to make it as a trader? Because ultimately, your growth is underpinned on the work that you put in daily and ultimately the moves that you get put on sides with. So, we're going to talk about 3 main steps here. Number one, very simple. We need to identify real time examples. Anytime you're exposed to a live market, there's obviously going to be different market conditions at play. So if you go into a market, even if it's your first day or 10 years on the job, the first thing you do is look at what is happening right now. You gather examples of what's happening in the current moment. You look at the best trade of the day, meaning what was the biggest move? And you ask yourself, is there any potential way that I could have gotten this trade? You use all of the resources that you have mentally, maybe in your notes, and you say, does this fit any sort of strategy that I know? Can I put any sort of risk profile or parameters on this for this to work for me? And if any of that's true, then you can begin to start to chip away. I want you to also observe the market conditions that are at play. Is there any sort of specific world events? Right now in 2025, in April, we are having a crazy, unprecedented tariff tantrum, complete biggest tariffs in over 100 years. Crazy stuff. So, with that being said, that is driving the market. So, you cannot just sit on the sidelines and honestly, this is a moment where I had to kind of reflect and say, I'm assuming it's going to get better. However, the thing is, what is currently going on right now is it is melting down. So, if I'm not looking for ways to get on sides with that, what am I really doing? Am I playing it too defensive? Am I being too complacent? These are the questions I started to ask myself on that call. And I said, okay, you're right. I told my client, you're right. How do I figure this out? So, what I've done in the past and what I've always done, anytime I saw something occur in the market, I was a student. I would study it. I would say, okay, what made this move probable? Because that's all we can trade is the probabilities. So, from my background, one of the main things that I would study was earnings plays, right? Earnings gaps, gap and go, momentum, options trading. Those all had catalysts where if you look at the entries that you might take on a trade like that, they seem somewhat aggressive, right? Buying a breakout or buying all kinds of crazy entries. However, they work because the underlying narrative of that move was sufficient enough for you to find an entry buying a massive gap up. It was actually under fair value when you're entering because of the narrative behind it. So with the market in the condition that it is, even when we are selling super aggressive, there's probably ways that you should be looking to get on sides with that move instead of being like, oh, it's too extended. Or actually, maybe the current uncertainty has the market way overvalued. So even at that low, low, low price, down hundreds of points on the day, maybe it's still too expensive. So that is a point of perspective that I would like to share. And it's something that I had to reflect on as well for myself. And I said, okay, how can I get on side? Is there any sort of moves that I can start to identify? And from there, how do I implement that into my trading to see immediate results? Going on to our next point, some of the things that you can be doing to implement immediate change is ultimately look at, are you getting a full set of news? Do you get every announcement? Are you seeing Trump's tweets? Are you seeing the headlines? If these things are driving the market and you're unaware and you're seeing the news a day late on World Star or any of these other Instagram pages, you're wrong. You're out of the loop. That's great. That news happened 6 hours ago. What good does it do you now? You need to know the minute it happens if this is what's driving the market, and you can observe identifiable patterns with market movements and also headlines. Then if there's a correlation there, you got to be on top of it. There's no other way around it. With that being said, you can also be using alerts. There are specific price levels that you might want to be aware of. If you're not up to date on staring at the charts all day, that's fine. I don't want you to stare at the charts all day. I actually would rather you just set an alert. So set the alerts, have the news feeds, have all of the important, valuable points of information to you. In addition to that, you can also have access to other markets. This doesn't really apply right now, but if you look back to maybe August of last year when you had some of that Japan meltdown, if you will, that uncertainty over there, you might have wanted to be able to trade some of those assets or some of those futures contracts associated with some of the biggest moves there. So having the access puts you ahead of most people. When there's all of the news about Solana and Trump, before the election, before the beginning of the year, essentially, that's really something you want to be on. Like, how do I get into this trade today? Instead of, oh, let me set up an account and do all this and that and the other. If you are a trader and you're able to identify changes in the market and you're able to trade hot markets instead of trying to force your one size fits all onto a market, then you're ahead of 99% of people, because most people are not prepared. They react. They wait for something to happen. It already runs. And then you have your aunt and your uncle saying, how do I buy Dogecoin? It's way too late. You need to be ready before the stuff happens. So traders do this all the time. They don't have access. They scramble. They're unprepared. Even with their own trading, they show up late. They don't do their analysis. Instead, if you want to really see unbreakable results, you need to have a prepared approach to the markets. You cannot just walk in and hope that it's going to just align with something that you happen to know. You need to constantly be expanding and constantly be ready for what it is that might come across the plate when you're at bat. So in addition to that, I also recommend just fail safes, right? So if you have, because this has happened to me a lot, at my house, the power might go out randomly. I know, crazy, right? 2025, that happens sometimes. So if you don't have any sort of backup power for either your computer, or for me, I do it for my internet. My internet doesn't go down for another couple hours after my power goes down. So that's another important point. I do that just so I can go and say, hey, you know what? If I need to get in a trade or out of a trade, I have my phone, which brings me to the next point. You should have apps to make sure that you're able to use your broker if there's a platform issue or you have a backup. And also just stop losses already limited in when you enter an order. Should be automatic, have brackets. Once you've done all the things you can to implement changes and you understand, like, okay, so I don't have a blind spot, the last part is you could begin backtesting what you've observed. It's not enough to just have evidence of an example of it working one time. That could be cherry picked, that could be convoluted, it could be contrived. It doesn't have to be real. However, if you could get 20 examples of what you saw, it's probably more valid than just that one red herring, right? So when you have multiple examples and you can document this and you can see a repeatable criteria-based entry model from that market movement, then now you're really starting to cook. So then it's a matter of, okay, how can I gauge the volatility? How can I position accordingly? How can I manage this? What is the expected value? What's the win rate on this type of stuff? Those are the types of questions where you can really start to fine tune your trading. And this is stuff that a lot of professionals talk about, but not many traders actually implement. So if you listen to some of the best, you listen to the Lance Breitsteins, you listen to some of the top guys, they'll tell you, document your best plays, playbook your setup. I mean, anyone who's aware of SMB Capital, that's what they talk about, the playbook, which is ultimately what I started reflecting on, because I've gathered a lot of examples from the past, from my previous trading, my different strategies I've traded, my entire career as a trader. I've documented, I have it all. I have notebooks, I have pages, I have Notion tabs, I have everything from it, from the whole journey. So I can see, where did I start to really get some traction on some of these moves? And one of the things that I had to reflect on is the ability to adapt to changing market conditions. I've been pretty rigid, because if you've traded from, let's just say 2021 to 2024, it's been kind of lackluster. Like, it's kind of just been sideways, give or take. It's been a little bit of a range. It hasn't been dynamic. It hasn't been these crazy, just volatile, just monster moves. It's been very, status quo. But coming into 2025, wake up, guys. It's a completely different market. And if you're not aware of that, you need to start to adapt to these conditions, because it's easy to sit here and say, you know what, that's something that doesn't work most of the time. But if it's working right now, who's the dummy for not participating in the move? Are you really unable to adapt to the market condition? Is that beyond you? And that's what I had to ask myself. Is there a way for me to actually adapt to these moves? And the answer is yes. I know how to trade momentum, even if it's not something I'm used to in the near term. It doesn't mean that's not something I'm capable of. So let me share with you some examples just from my past trading documents and journals, and just want to share some thoughts and basically examples of what I've looked at. So as you can see, I have a lot of stuff recently, right? Last, a couple of years, a lot of fair value gaps, all that good stuff. But if I go back further into the archives, we see, some more futures stuff. Then we go back further, we can see some more options stuff. So with that being said, I come across something like my gap trading playbook, right? where I start talking about like gaps, and you see these market gap, like Shopify's at all-time highs, you're just going to buy all-time highs. With the index, it typically has a little more sideways action. But if that's not what the market's doing right now, if it's resembling more of like a momentum play, how do you get on sides with that? So I look back at some of this stuff and I can look at some of these examples. And on some of these charts, right, you might see it as like kind of crazy to buy super high up, like 3, 4 candles in a row, but I would do it all day. So what's stopping me from doing that right now, other than my own bias, my own implicit bias against what my inability to adapt to the recency of the market? I have this long-term view where, generally speaking, momentum trades don't work that well with futures. However, that is not the case right now. Right now, it is a momentum market. So if I'm not adapting to this, I'm effectively getting left behind. This is something that we talk about a lot in the Discord. I have a free Discord linked below. Go ahead, join the discussion. Let me know some of your thoughts on this. But as we continue through here, we can see that obviously, market conditions can greatly vary depending on your asset. So the ability to trade price in a multitude of ways exists. But what I had to do ultimately was ask myself, is there anything that I'm missing? Is there any sort of like, potential scenarios where maybe a market has a crazy move overnight, maybe a London swing, and then we sell off aggressively? Just because I don't get a tippy top short doesn't mean I can't get involved in the move. Just because it's extended 5, 6 candles in a row doesn't mean that the move's over, because these moves are ultimately originating on the higher time frame. So why am I so confined to what the 1 minute's doing or the 5 minutes doing? So if you're not adapting, you're essentially dying in these markets. Market conditions will consistently evolve because market participants consistently evolve. So with that being said, continue through here. You see, yes, this gap trading playbook. We also have counter gap plays. Again, you can just look through. There's inside day breakout, right? Just look through. There's different setups for different scenarios, right? This is a market that might be trading at all-time highs. And if you just flip this chart, that's the scenario we're being given on the index. It's not a chop, chop, chop kind of market. It's a sell, sell, sell market. And if you're not involved in any sort of downside movement, what are you doing? How are you making money? It's not something that you need to force onto yourself if it's not supernatural, but you have to be open to the opportunities and open and have a willingness to adapt as things change, because otherwise you get left behind. So I can sit here and compare so many previous examples of what index moves are typically like, where they're very back and forth, very kind of just, long, short stuff, which I like. I like that very kind of just stagnant price action. It's really easy to trade ranges, failed breaks. Continuations get extremely challenging, especially when you think. That's the problem. You shouldn't be thinking when you trade. You should be simply trading. But when you think something's too far gone, either up or down, that's when you really get put in a bind, because then you're forced to look to potentially catch a falling knife, or you're shorting the tops. That's a recipe for disaster, especially when the narrative, like we said, is driving the market. So I hope these thoughts and this comparison of essentially how markets can evolve and how narratives can drive markets, and ultimately your ability to be prepared for these moves, I hope this has all helped. If you find value in this type of content, share it with a friend, leave a like, and until next time, we'll talk soon.